Polymarket is bringing Chainalysis into insider trading monitoring as prediction markets face more scrutiny over well-timed bets. The Polymarket Taps Chainalysis story is worth attention because Polymarket enlisted Chainalysis to monitor insider trading activity and suspicious on-chain behavior across its prediction market platform. The tension is practical. Chainalysis will monitor trades, while well-timed bets raised concerns. The useful read is not hype or a prediction. It is the gap between the confirmed change, the mechanism behind it, and the signal that would move the story forward. That gives viewers an immediate reason to care. The headline touches Polymarket surveillance, but the pressure point is flag outcomes. The confirmed baseline is narrower and more useful than the headline. The move follows enhanced market integrity rules and concern over bets that appeared unusually well-timed around sensitive real-world events. That baseline matters because it gives viewers the starting facts before claims or market reactions take over. The strongest supported signal here is active surveillance, while the current status is Chainalysis added. Those details set the boundary for what can be safely said right now. They also stop unsupported numbers, timelines, or outcomes from slipping into the story. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism behind Polymarket Taps Chainalysis is this. Blockchain surveillance can link wallet clusters and flag coordinated activity, helping a market distinguish genuine crowd pricing from privileged trading. In plain English, the story is not only about the actor or asset on the screen. It is about how access, liquidity, compliance, yield, security, or policy pressure changes behavior. That mechanism is why wallet clusters can reveal links and why fair prices need clean behavior. Without that link, the event would be a headline with no clear market or user consequence. The impact lands where the mechanism meets real users or markets. Users may gain more confidence if monitoring deters abusive activity, while institutional participants get a stronger compliance signal. That means users depend on market trust, and the practical consequence is that compliance becomes a feature. This is the part of the story that viewers can actually use because it identifies who is exposed and what changes for them. The focus stays on Polymarket and Polymarket surveillance rather than a broad claim about every crypto asset. The open question is not a side issue. It remains unclear whether flagged activity will lead to public disclosures, enforcement actions, account restrictions, or private review only. The confirmed piece should not be stretched into a bigger claim than the evidence supports. Right now, enforcement actions are unclear. Public outcomes would clarify it. That distinction prevents speculation from being treated as a settled outcome. A cleaner confirmation would come from the stated trigger, not from a louder interpretation of the same facts. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For Polymarket Taps Chainalysis, the next signal is specific. The next signal is whether Polymarket reports outcomes from the monitoring program or changes rules after flagged activity. The near-term trigger is flag reports are key because they show active policing. If that signal appears, the story moves from claim or setup into confirmation. If it does not, the safer reading is that the pressure point remains unresolved. Until then, the closing read is simple. Track flag outcomes before treating the outcome as settled.